Yes, today we are going to discuss what are the different types of accounting concepts. Accounting concepts. Look, the first is called entity concept. New, what is entity concept? Look, theory, accounting theory is very very important because आप इंटिटी कॉन्सेप्ट को नहीं समझोगे, आप अकाउंटिंग कॉन्सेप्ट नहीं समझोगे तो आप कभी भी प्रैक्टिकल नहीं कर पाओगे. If you want to work smoothly on your practical portion, you have to give 100% to your theoretical portion. In simple way, I can assure you, without having a proof or sound knowledge of theoretical portion of accountancy, you can't work hard, you can't work smoothly on the practical field of accountancy principles. Clear? Entity concept. Right now I am going to discuss about the entity concept. Entity concept says business is different and owner is different. In simple way we can say the business entity concept says, first concept we are talking about business entity concept. Popularly this concept is called as business entity concept, or you can say simply entity concept. So entity concept or business entity concept both are same thing. What is actually the business entity concept? Let me tell you that. Business entity concept says business is the owner itself. Business का मालिक business खुद होता है. Business entity concept says that owner is different one and business is different one. Business has no relation with the owner. Business takes its decision itself. Business has its assets and liabilities. Suppose you can say, sir, this is the furniture. Now tell me, who is the owner of this furniture? You may say, sir, if the furniture owner is you is the owner of the furniture. I will say no. Suppose my coaching center has 1 lakh rupees of furniture and 1 lakh rupees loan. So loan is the liability and 1 lakh rupees is the asset, that is furniture. So the liability and the asset both are not owned by me. Actually that is owned by the business. So 1 lakh of asset in terms of furniture and 1 lakh worth of loan both are owned by the business, my center's business, not owned by me. Is that clear? So business is different and the owner is different. Business owner has no link, no relation, no interrelationship with the owner. That is expressed by the business entity concept. Business entity concept clearly mentions that business has no relation with the owner. Both are poles apart. Is that clear? So this is actually business entity concept. In one sentence we can say the concept which says business and the owner are different, both are not same person. Suppose Sanchita may ask me, sir, it's your business and it is you owner, both are same thing. Amos sir and Amos sir coaching class, both are same thing. She is incorrect. She has no idea about business entity concept. If she has got the idea of business entity concept, she must say that, sir, according to business entity concept, your business is your center. Your business is different thing and you are different thing. You may be the owner, but according to business entity concept, you are not the owner. Business is different and owner is different. Both are not the same thing. Both are not same. For common people say business and the owner both are same, right? Suppose you are running a shop. So the other people say that you are the owner of the shop. So shop and owner and shop both are same thing. But it is a violation. It is just a violation against the principle, against the concept of entity concept. Mind it? So you have to understand that is called business entity concept, which is popularly known as entity concept. Next concept is consistency concept. Yes, Saurabh, what is the concept? Consistency concept. Second concept is consistency concept. Look, suppose you are following double entry system in accountancy. So it's better follow for many years, coming years. You should follow, you should stick, you should adhere to the double entry system. It's not like that you 1 year you following double entry system, after that single entry system. Suppose sometime you following the straight line method of depreciation on the fixed assets. On the other year, in the coming year, in the next year, you are started following the reducing balance method. So you are not consistent with your accounting principles, accounting concept. If you are following diminishing balance of depreciation, follow it for many years. Follow it for first year, second year, third year, fourth year. Without having a proof reason, don't change your method of depreciation. Clear? Suppose Keshav sometimes says yes, sometimes says no. I will not going to believe him. Why? Sometimes he says, sir, I will go along with you. Sometimes he says, no, I will not go along with you. Means he changes his mind all of a sudden. So nobody can trust in him. Nobody has a reliance on him. Am I right? Because he is not consistent with his performance. He is not consistent with his words. He is not true to his word. Am I right? In the same way, suppose you are not following the same method, same principle in accountancy practices, nobody will believe you. Neither the debtor, nor the creditor, nor your workers, nor your staff, nor your manager, neither the government, no one will believe in your accounting principles, practices and anything. Why? The answer is so simple. The answer is so simple. Because you are not following the same principle, same method in your accounting principle. That is we can say you are not consistent with your method. Consistent method means suppose Virat Kohli is not performing consistently better, he will be out of the team. Am I right? It's maybe Rohit Sharma. If he is not working perfectly, so we can say his performance is not consistent. In the same way, if you are not consistent, if you are not following the same method, same rule, same principle, same method in accountancy, so it's not good. It's not good. So this principle says the consistency concept says that the consistency says clearly that you should follow the same method for coming years. Suppose you, I'll give just an example. Suppose you are following that I will charge provision on debtor. Suppose you say that I will provide 10% depreciation on 10% provision on debtors. In the 2020 you provided 5% on debtor. You suppose you provided 5% debtor provision on debtor. In the coming year, in the 2021, you started 10% as the provision on the debtor. So different years you are charging different rate of provision. In similarly, you are charging different rate on the different machineries, different furnitures, and that is not consistent with performance, and your performance is not consistently. So this is the violation of the concept of consistency. Clear? So in short way, in a simple line, I can say you that consistency concept says stick to one method. Stick to one method. Don't change your method unnecessarily. Don't change your principal method unnecessarily without having a proof, a strong reason. Don't change your method. Adhere to one principle, one method. I repeat once again the example. Suppose you are following double entry system, follow double entry system. Suppose you are following reducing balance method, follow reducing balance method. Don't go to straight line method. All of us said it, you should not change the method. So boys, this was the second method, second concept, that is consistency concept. So first was entity concept, or you can say business entity concept. That says business and owner are different, not the same thing. And the second concept is consistency concept. Now we are moving to the third concept. That is called going concern concept. Going concern concept. Look, business has been started. For how many days? For how many years? Uncertain. there is uncertainty regarding the life of the business. Business has been started forever, forever. It's not going to be finished within a coming years. So this accountancy concept, that is going concern concept, asserts that business has unlimited life. Business has unlimited life. Business is not going to be finished in the coming years. You are running a business, you should put in your brain that business has been started for years and years, forever, forever. It has no ending. It is not going to be finished. It is not going to be complete. Clear? That is what about going concern concept. Business has been started for going, not to be stopping or ending. Clear? That is called going concern concept. Next concept is accounting period concept. The fourth concept, right? Accounting period concept says that doing business is very good, earning profit is better, but you have to understand, you have to look. Suppose you people take exam, right? In your school, examination is held sometime quarterly, that is after 3 months, sometime half yearly, that is after 6 months, sometime after 1 year annually. So quarterly, half yearly, annually, exams are held in your school premises. Why? To evaluate your marks, to evaluate your performance, to evaluate or measure your educational performance. Am I right? Huh? Evaluate your performance. Evaluate your performance. Similarly, we should evaluate, we should measure our performance in business. In our business, yes, whether business is earning profit or earning loss. If business is earning profit, how much? What was our expectation and what was our actual earning? Right? What is the profit? Where is loss? So we should measure all these items. Am I right? So we should measure it. Otherwise, blindly running a business is not good. Blindly running our business is not a good thing. So it's better after Mr. Tushar, can you attend him? After 6 months or after quarterly year, after annually, we should take a break. We should take a break and calculate the accounting principles. We should do the accounting work with the help of different type of financial statements like trading account, PL account, balance sheet. We should measure how much earning is our, how much profit we are earning right now. Then we will move forward. Clear? So it's more, suppose Tushar has a better business, higher business, bigger business than Kesav. So if Tushar thinks that it's better that I will evaluate my business profit half yearly, so he can work half yearly. If Kesav is thinking, Kesav has such kind of attitude that my business is not so big, it's better I will measure or evaluate my performance of my business annually, so he can go for that. So some business enterprises evaluate their performance annually, some quarterly, and some, the big company like Reliance Industry, Ambani, Adani's, Tata, Birla, they announce their dividend quarterly. Means they prepare their work of accountancy, they prepare their accounts, they measure their performance just after 3 months. Just after 3 months. So they are in the position to announce the profit to the shareholders. That is called dividend. That is called dividend. So boys, this was called as accounting period concept. So in here, Mr. Ashish may ask me, sir, tell me in short way, what is the exact meaning of accounting period concept? The word is still there, period. Accounting period means after a period you should have to measure your performance of your business profit or loss. That is all about. After a period, the period may be 6 months, 3 months or annual, but we have to calculate with the help of different financial statement how much earning, how much profit we are getting. Clear? So this was the accounting period concept. There are other concepts also. For example, money measurement concept. Boys, can you attend to me? Money measurement concept. Saurabh may ask me, sir, tell me about money measurement concept. Am I right? So money measurement concept means only those entries are recorded in the book of accounts. Sanjita, attend to me. Only those journal entries, those transactions are recorded in the book of accounts which has some which has some money value. Suppose director of Reliance Industry has been murdered or has been killed, has been died. So this is an incident, but it has no, we can't convert it into monetary terms. We can't. This is an incident. This is an incident. But we can't convert this loss of the death of the manager in terms of money. So this incident is not going to be a part of the books of accountancy, the books of accounts. Why? Only those transactions are recorded in the books of accounts which can be measured in terms of money. In terms of money. Suppose I bought machinery worth rupees 2 lakh. Worth rupees 2 lakh. So how much is the price of the machinery? That is 2 lakh. So the machine worth is 2 lakh. It will be recorded in the books of accounts according to the money measurement concept. Because we can measure the machinery in terms of money. Clear? Suppose I am sick. I am not feeling well. I am ill. I am terribly ill. But it can't be expressed in terms of money, so it's not going to be the part of books of accountancy. Books of accountancy. The reason it can't be expressed in terms of money. Suppose I have lost this scale which has, suppose the amount which has cost value is rupees 20. So it will be recorded in the books of accounts. Why? Because we have expressed the worth of it. So only those incident means ghatna, only those incidents which can be expressed in terms of money are recorded in the books of accountancy. This is all about money measurement concept. Money measurement concept. So money measurement concept itself has the same kind of meaning. Money measurement concept, that concept says only those transactions would be recorded in the books of accountancies which can be expressed in terms of money. Clear? Next concept is, there are many accounting concepts. Next concept we can say is dual aspect concept. Dual aspect concept. Dual. What is this? Any idea? Dual aspect concept says that the amount of debit equals to credit. The amount of debit equals to credit. The amount we have got, we have to pay. Suppose I have paid 1 lakh rupees to buy a machinery. So 1 lakh worth of rupees has been went away, but in return I have got 1 lakh worth of machinery. So debit is equals to credit. Always debit should be equal to credit, or in other words we can say asset must be equal to liability. We have discussed in the previous classes when we are doing accounting equation, and you remember at the time of doing solving the accounting equation, we have come across this kind of scenarios where circumstances where we have found that assets must be equal to liabilities and debit equals to credits. Debit always should be equal to credit and assets must be equal to liabilities. This is all called dual aspect concept. Dual. Okay.